Yeah, I've got a stock I'm looking at the moment, Steve, for the new ISA season. Have you ever come across Middleby?
Not independently of you sending me some stuff on it, no.
Okay, well, I hadn't either, and it only came about because I stumbled across it at the weekend when I was trying to figure out who I needed to buy the new chrome bar on my Rangemaster, which I got when I bought the house. The guy quite left it to me, and because I was like baying salt onto my steaks and stuff, I have managed to completely ruin the chrome bar that opens the oven. So I thought I'd probably better replace that. Anyway, stumbled across that Rangemaster isn't its own company. It's owned by a company called Middleby, and this company just went from there. I just had a quick look at it on Trading 212. Thought, hell, this is growing at a reasonable pace. Went on to ROIC.ai, which is my favourite thing for looking at financials, and then just went from there, Steve, and scribbled this piece out in about 2.5 hours. But here we go. So, it trades on the NASDAQ, which is quite funny for when I tell you what it really does. Its name is Middleby. It's MIDD is the ticker. It's a global food service operation with over 100 industry-leading brands. Its primary segments are commercial, food processing, and it has a pretty interesting-looking retail arm as well. It's under $8 billion in market cap at the moment, which I think is somewhat cheap for what it is, but we'll get on to that. So in terms of food services, we'll just better quickly define that. Middleby really mean here is high-end kitchen appliances. So think of ovens, kitchen appliances, and then in commercials, we're looking at industrial processing, baking systems. You'd be looking at conveyor ovens, ranges, steamers, convection ovens, combi ovens, steam and induction cooking equipment, fryers, toasters, griddles, etc., etc. Anything that you would need in a commercial kitchen. Some of its brands that you'll know, you may have heard of Viking, you may have heard of Aga, Masterbuilt, Rangemaster. I think it's Kamado Joe, but that's an egg-shaped barbecue that Aldi got in trouble of when they copied it. It's a smoker and a barbecue. But it's not just impressive brands, Steve. They have impressive customers too. I was looking down the list. The customers are Yum Brands, who own KFC, Dunkin' Donuts, Burger King, Domino's, Five Guys, Kroger, Taco Bell, Tim Hortons, Arby's, Chili's, Toby Carvery, Texas Roadhouse, White Castle, Pizza Hut, Wendy's, and that's just to name some of the ones I picked out of the list of 10,000 customers they have. But what I think is even more impressive is that this is a company that's actually embracing technology. They're not being disrupted by it. There's not some upstart coming and eating the dinner before they can do it. Every commercial kitchen that they ship now is fully equipped with Internet of Things real-time reporting, meaning that managers of these kitchens get real-time alerts, temperature monitoring, workflow processing, any kind of diagnostic data, as well as allowing remote access to things like digital signage, or as simple as allowing HQ to issue new recipes to stores remotely, control things like lighting, HVAC systems, refrigerations easily. Even better, this is actually a recurring revenue stream for Middleby. Steve, they even have a robotics arm, which I was so surprised about. I was not expecting this place to have a robotics arm. So they've got one called Cobot, and this can provide a wide range of functions. It actually learns by demonstration, meaning no program is required. Middleby advertised that the payback on this robot is actually under a year. They also have two other bots, Steve. They're called FryBot and PizzaBot, and I'm going to let you guess what they do. But PizzaBot can make 100 of its products of different variations per hour. In terms of metrics, revenue has grown about 11.75% per annum over the last 5 years, down from about 13% over the last 10 years. Earnings, they've grown at 23.73% over the last 5 years. It has earnings, which is faster than the last 10 years, where they've actually grown at 19.92%. So here's some numbers for you, Steve. Revenue back in 2017, that was $2.33 billion. That was about $41.18 a share. At the close of the last quarter, and that was the full year as well, it's now at $4.03 billion, or $73.04 per share. Earnings was $5.26 a share in 2017. That's now $7.91 a share. Shares outstanding has also dropped 2 million over that period to 55 million outstanding. That leaves you with a PE of about 19 if you're looking backwards, between a 13 and a 14.5 PE, depending on your favourite flavour of analyst. In terms of free cash flow, that's at now $6 a share. That used to be $4.41 in 2017. So again, pretty positive, around a 50% growth. Debt is one of the issues that I've got with it. It is rising, and it currently stands at just under 2.7 billion. But even if you want to factor that into your enterprise value, and you should, you're still not looking at a very expensive outfit if they manage to make $10 a share in earnings this year, which they should. You could also adjust in the acquisitions they made in the year if you want to get a better a better idea of earnings power. They've made a lot of them. So look, it's quite an acquisitive business. Since 2019, it's acquired and integrated 25 brands and a host of new areas, which they think opens about another 600 million in revenues for them. And they think they're expecting about a 25% EBITDA margin, which brings us on to EBITDA, which is a focus of the business. They want to improve the margins on all three segments of their business to obviously improve margins across the board. If they pull this off, expect this business to look cheap really quickly. They think they can broadly add about 5% to their EBITDA margins just on cost savings alone. So it's worth noting that Middleby has about 1.2 billion in order backlog as well to work through this year. So its demand has somewhat sheltered them from the pressures of inflation, at least in the short term. That's about half a year's, well, it's not quite half a year's revenue, but it's on its way to it. So yeah, Middleby, Steve, I quite like it. I think this is trading at a decent price. I think it's got decent prospects. I think it's quite easy to see where the growth could come through. So I've added a little bit of this to my portfolio, and it's probably the stock I'm going to buy first on April the 6th.
I'm interested in two things about this. So my latest thing when I find out about new stocks is to try and compare them to other stocks that I have at least heard of and have some understanding of how they work. And I'm trying to compare this because it sounds like there's sort of two businesses going on here, or at least two lots of business model that I can tell here. One is a kind of software thing, like a kind of CRM for places like Burger King, where your kind of kitchen equipment speaks to your other stuff via kind of Internet of Things and tells your management about what's going on. The other is a kind of equipment manufacturer, and when I think about these, I think of businesses that I find quite impressive here. So when I think of equipment manufacturers, I tend to think of razors and blades type businesses. I very lazily think about stuff like Intuitive Surgical or Medtronic, but there's no reason I should be kind of constraining myself to thinking about equipment for hospitals or whatever. I mean, the way those things work, it could be kind of aircraft equipment or anything like that. And I think the kind of idea here then is to get a big installed base and then start charging customers because they need replacement parts, or in the case of Middleby, you have a kind of user interface or operating system or something that only works with your nice Middleby pizza bot. I had a kind of side question about the pizza bot, which we'll come back to in a moment. But on the face of it, this sounds like a very nice kind of business, right? I mean, if you think about an Intuitive Surgical style model, everyone knows that's a really, really good business. It sounds like it has a better balance sheet than Middleby does, but this is a nice model to be in, right? You have a nice kind of razors and blades equipment thing and a kind of tech CRM type thing, which just kind of makes it a harder and harder ecosystem to get out of if you're a restaurant and you get started like this. Am I right about that?
Yeah, pretty much. I think that's one of the things that makes it a little bit more moaty than you probably give it credit for, is that if you can build in the Internet of Things, the recurring revenue sort of business, it makes it people a lot more sort of not inclined to rip it out and replace it with something that maybe isn't as effective as that. But in terms of its valuation, Steve, I did do a quick comparison on it before I bought it all, and every company that I could find that is comparative, i.e. in that industry, trying to do that kind of thing, is more expensive than it. There isn't a single one that is cheaper than it. And I think this has probably the sort of best prospects out of all of them that I could find.
That's interesting. I mean, this does look to me, so price earnings ratio of, let's say, a 19 for the moment. Okay, as you point out, you want to factor in the debt for that, so it's going to be higher than 19 compared to a relatively unindebted company. But I mean, it looks like growth is going to be kind of a reasonable thing to find here. So it's not just about that kind of building out an installed base. You said they have quite a lot of clients already. I'm guessing you can kind of hike prices on replacement parts and so on and so forth and get some half-decent growth going on like this. You offered a kind of 5-year CAGR number there, which sounded pretty good. I mean, I'm guessing quite a bit of that has decent organic growth prospects here.
Yeah, and that's what I think the beauty of it is that I think that, yes, they're trying to grow a retail arm as well, which is a new arm of the business for them. They're trying to have kitchen showrooms and things like that, and appliance showrooms as well. This is a brand new thing for them. They've not really pushed on here before, but they reckon they had, I think it was in the first month, they had 40,000 people through the door at one of the showrooms. So this is something potentially that they may choose to double down on. But in terms of comparisons to the whole sector itself is growing at about 9%. So Middleby's forward earnings growth is about 9%. So they are going to grow at the same kind of speed as the sector. The beauty is here that if we forget the depth for now, they're trading at least one point under in terms of price to earnings to all of their competitors. I mean, the biggest in the sector is Donaldson Company, but they're trading at 22 times earnings and they're only growing at 6%. So what you're getting here is essentially the cheapest in this specific sector, but it's actually growing at the rate of the sector itself. Now, I think when this robotics arm comes along and begins to feed real revenue into Middleby, I think this will be an even quicker grower.
Yeah, the robotics arm caught my attention. It caught my attention when you sent me this stuff before. I now have, I guess, the really important question about this. Let's talk about PizzaBot for a moment, then, in that case. PizzaBot makes up to 100 pizzas of various different types an hour. And you mentioned Yum Brands as one of their customers, and contained within Yum Brands is Pizza Hut, which I can't remember whether you mentioned separately or not, but I'm pretty sure that's under the kind of Yum Brands umbrella. Who the hell is ordering 100 Pizza Hut pizzas an hour? They're not even good pizzas, these kind of things, as far as I can tell. It's 100 pizzas. Do you think there's any kind of move to any room for improvement on these kind of things, or is this just, the pinnacle of pizza making speed and efficiency and stuff? That's pretty much to a minute, near as makes no difference. And beyond kind of me, and I'm not a market by myself, I don't know who wants 100 pizzas every hour.
Yeah, it is a pretty crazy thing to watch because it's a huge system. You would not expect. I was expecting PizzaBot to be some kind of like slightly mechanical looking bender from Futurama, with a chef's hat or something. But no, it's actually like a big industrial. It looks like an ASML semiconductor machine with a conveyor belt in the middle. But
wow.
Yeah, I guess if that's what you want. I mean, some of the stuff looks way different to that. I mean, so some of the Cobot, for instance, that's more like an arm, and it's an arm that sort of clamps onto the desk and learns by demo, essentially what the people teach you to do. But some of the stuff that they're calling a robot is essentially just a big machine. I think there's a lot of interesting stuff in here. I think this is well worth a look.
This to me feels like kind of plausible AI automation type stuff. I mean, we've paid a lot of attention on this show, and not unreasonably, to the prospects for kind of self-driving cars and so on. But it looks to me like that's sort of a fair way down the tracks, as it were. But automating stuff in restaurants where it comes to putting together pizzas and so on, that seems to be like something that we could make much more efficient and so on.
Well, it was only the other day that McDonald's unveiled their first fully automated restaurant, wasn't it? I think that was we talked about on here. So yeah, it's pretty interesting. The thing that differentiates, just to let you know, because I did read about the PizzaBot, the thing that differentiates it from its competitors is that essentially their competitors sell cartridges of ingredients, which Middleby didn't want to do, because even though that's a kind of picks and shovels kind of thing for them to resell the cartridges, they thought that was quite it's quite tying, and it probably pissed your customers off. So they basically use hoppers, so you can fill the hopper up with whatever it needs to do, and they can do it. But even things like if you want pepperoni on your pizza, it will slice it for you fresh rather than just having a hopper full of pepperoni, which will inevitably just stick together. So you can tell it even how thick you want to put the pepperoni on your pizza. So it does a lot of stuff, Steve. It's a surprisingly good business for, in terms of American money, not a lot of money.
Yeah. This is the Stocks for Civilized People segment for the new ISA season, not for Paul. I'm assuming this thing doesn't pay a dividend?
No dividend, no.
Cool.